Hello, everyone. Thank you for joining us today for today's webinar. Just want to get started and stay on time for everybody today. I know everybody has busy schedules. Hopefully everyone had a good summer and smooth back to school. Now that it's September, our webinars are getting up and running again today. So welcome and thank you for joining us. If you're looking to set up or improve your board governance, you are in the right place. Anthony will get us started and walk us through some key considerations and things to consider to help you get the most value and support from your board. We'll save time at the end for questions. I'm Carolyn Powell. I'm the Director of Development here at Tronconi, Segura & Associates, and I'm going to be your host again today. Just quickly before we get started, some housekeeping. There is a toolbar probably on the right side of your computer, and there is a copy of the handouts for today's presentation and also Anthony's bio. And you will also note that there is a questions section. If you have questions throughout the presentation, just pop them in there and we'll get those answered for you. After the presentation today, you will receive a quick survey. In that, just let us know how the presentation was, if it was helpful to you. If you have any additional questions, or if you'd like to set up a meeting directly with Anthony to talk about your situation a little bit further, or if you have a specific question, you can do that also in the survey and we'll reach out to you and get back to you and set something up. So a little bit of housekeeping there. If you could just keep an eye out for that post-webinar survey. So without further ado, let's get started. Tronconi, Segura & Associates is a certified public accounting firm, and we also do business consulting. Anthony Pizzino is a CPA and a senior manager here at the firm. He has over 16 years of experience in public accounting. He has a broad range of industry experience, nonprofits, government agencies, foundations, higher education, retail food, professional services, and real estate are just some of them. He has specialties in financial statements, audits and reviews, internal controls and quality controls, and professional standards. So I'm going to get it started and hand it over to Anthony to start us off.
Okay, thank you very much. Just want to welcome everybody to today's session, board oversight and nonprofits. We're going to be talking about different strategies and best practices regarding to non-for-profits and board governance. I'm delighted to be here, and I hope to provide a good balance of perspective and a wide variety of topics in regards to board governance, particularly with nonprofit organizations. My experience with board governance and nonprofits comes from, as Caroline mentioned, over 16 years of auditing and consulting experience with non-for-profits, serving on a variety of boards and committees, some big, some small, in various capacities. One thing I do want to say about board governance is there's no one size fits all with board governance. It depends on size, the budget of the organization, complexity, the stages of the board, whether it is a newer board, whether it's a well-established board, based on their various life cycles of the board. So today we're going to go over some practical tips. I'm going to hopefully help everybody who's involved with a board, whether you're on a board, if you're a for-profit entity, or if you're a for-profit person and you're on a nonprofit board, if you're a nonprofit CEO or CFO that's attending. I'm going to try to give some tips and strategies to improve board governance within your organization, or if you're on a particular board. Topics we're going to go over today. First topic will be board responsibility and fiduciary duties. Main thing there we're going to talk about is what can go wrong and how to mitigate that during the process of board meetings, certain events that happen throughout the year, going through your audits, going through items that happen during board meetings. After that, we're going to go ahead and talk about some training, orientation, onboarding for new board members. Then we're going to get into key governance policies. This is probably my favorite section. There's a lot of substance within that slide. So we'll talk about different policies, conflict of interest policies, whistleblower policies, related party transactions, a lot of good stuff, to talk about there. Then we're going to go talk about committees within the board that may be needed, how they're needed, what would be a cost to form a committee, different types of committees. Moving on after that, we'll talk about maximizing value during a board meeting, how to increase board engagement. And then moving on, the last 3 bullets on the topic side, rebuilding your current board. I know a lot of people may be on a board where you may have some stagnant board members that don't, attend all the meetings. They don't come prepared. You're not sure why they're on the board. So we're going to talk about, how we could help your board assess what you have and help you find new candidates if necessary. Crisis management sounds, very seriously. There's a crisis going on, but you believe it or not, everyday activities, whether it's cybersecurity, reviewing financial statements, the pandemic, COVID-19 a few years back, there's all types of crisis management and types that go on every day that a lot of people might not think are crises, but we're going to talk about different types. We're going to talk about how to approach that and how to mitigate any risks that help your organization. And lastly, we will be talking about fundraising and responsibilities of board members to help fundraise, reach out to different community leaders, strategies, how to do it, things like that. So a lot to talk about today. And another thing is board governance, you could probably do a 1 hour, 2 hour webinar on any one of these topics. It's a wide variety. You could really dig deep into them. So what I'm going to do is try to give a high level overview of what I think is important in today's environment, particularly in the nonprofit arena, and try to help anybody as possible. So moving on, let's dig in. First thing I want to do is I'm going to start off with a question. Why board engagement matters? So why does it matter to your organization? It matters in a lot of different ways, but it is critical in moving the organization forward and fulfillment of its mission. So looking at the audience today, I see a lot of people from nonprofit organizations. I see some attorneys, professors, and such forth. A lot of people involved in for-profit entities. There's a big difference between for-profit and non-for-profit. Hence the word. A for-profit entity is for one word, profit. The way they do things, the way they operate, the way they complete their financial statements, the way they get to where they have to be is much different than a non-for-profit. A non-for-profit is based on their mission to help a certain cause within the community. And a lot of things are done differently, whether it will be the board structure, whether it will be financial statement presentation, strategic planning, very different ways that they operate, and the way they get to their goal is a lot different too. There's different routes that they take. So on this slide, I'll just read the first bullet. An engaged board is a forward-thinking board that strives for a collaborative partnership with the CEO and executive director. So let's highlight first sentence, forward thinking. Effective board talks about what's going on in the future. They're focused more on future issues, not so much what happened in the past. Obviously, what happens in the past does matter. You don't want to repeat history, and a lot of lessons are learned through mistakes, but board members should be forward thinking, how to advance the organization, how to make it better. And then also collaborative, that's another important word here. The CEO, the executive director should work collaboratively with the board of directors. So again, you always want a good relationship with the CEO, the executive director. With the board, you want to make sure that they're on the same page in a lot of items. Obviously, There are going to be disagreements and people have different ideas, but you want to make sure that they're on the same page working together for the common cause. Bullet 2, engage board's work between board members and attend meetings well prepared. Members take their responsibilities seriously. They show up for meetings. They come prepared for meetings. They follow up on items in the previous meeting. They come with different ideas, strategies, solutions. So there's a lot of characteristics there that you're going to want to see in your board member, or if you are a board member, those are things you should be trying to achieve. And the last part of this slide is willing to deliver candidly, confidently, trending on sensitive topics. Board members are comfortable with engaging with one another. That's a sign of a good board. They listen to one another. They take everybody's perspective and ideas into considerations when making decisions. They respect other positions. They lay out what's gonna, based on one person might have one idea about one thing, the other person might have another that could be totally opposite, but they listen to each other and work together, and they're comfortable with tough discussions. Obviously, when there's disagreements, people get passionate, especially on a nonprofit board. So you have to be comfortable having those tough decisions, and you have to trust one another. Board is, in a way, a mini corporation. It has to work together in many different ways. So if I were to put together a board and have to use singular words to describe it, I would use words such as strategic, collaborative, committed, passionate, supportive, dynamic. Those are the type of characteristics I would like to see in a board that I would be on, or if I was a CEO or CFO, that's the type of items I would like to see, characteristics I would like to see in my boardroom. Board responsibilities. Put together a pie chart here to highlight 6 items, and I think these 6 items, fall into a good realm of basic responsibilities of the board. I'll start with lead strategically. Board should have a strategic plan. They should develop and communicate the organization's directions, goals, and how to get there. One of the most important thing the board is responsible is to build a competent board, to make sure you have proper people on it, to make sure that board is diverse, make sure those board members are active. And we'll talk a little bit about this later in the presentation. I have a slide dedicated to candidates and how to assess your board and things of that nature. The strategic plan should articulate the organization's mission, its role in society, and future direction. So you want to make sure that the strategic plan aligns with everything the organization wants to do. So again, what is its role in society? Where is it going? Has it been stagnant for a while? There changes have to be made to the strategic plan. All of these are all very important aspects of board of directors. Ensure financial stability. This is very important, and as a CPA, as an auditor, audited a lot of nonprofit organizations over the years, and see a wide variety of boards. Some boards that are really good, really involved. They really know what the financial statements mean. They get updates on during the board meetings, intern financials, things like that. So it's important that board members understand the business model and all financial aspects of the organization. For example, if it's a community action organization, board members should understand program specifications. What's that organization doing? Are they helping children with an after-school program? Are they helping educate people on addiction to drugs or things like that? What is the mission, and how is it? How are you as a board member understand that, and how the dynamic and the financials work with that? If you're a healthcare organization, you might want to understand about the 340B federal drug pricing program. If that's part of your entity, you're going to want to know at least the basics on that. You're going to rely on experts to help you, but you should know basic financial aspects. If it's a private foundation, you're going to want to know obviously about investments. There's a lot of investments going on. There's a lot of rules that specify to private foundations that are different from your regular not-for-profits. Finance committee plays a big role in here, and we'll talk about committees a little bit later. You should have a finance committee that has expertise, a CPA, a finance person, somebody who could help teach other board members how things work. And obviously, the CFO of your organization will play a vital part in that and in presenting financial statements and things of that nature. Budgets, you should know about budgets, should know what they mean. You should compare budgets to actual. You should understand what the variants are. You should be explained what the variants are by staff. Approving significant transactions. CFO, CEO has a credit card. You're going to want to look at those statements. You're going to want to know what's going on to avoid any issues, and we're going to talk about that a little later as well. Understanding GAAP financial statements. You want to ensure that the financial statements that you are looking at are in conformance with GAAP. If they're not, you're going to probably make a poor decision based on the information that you have. For a not-for-profit, functional expense plays a huge part in understanding what your organization does. That schedule of expense lays out what's program expenses, what's management and general expenses, fundraising, etc. So those various percentages within a functional expense statement is extremely important to know where the money is going in your organization. If you think about a nonprofit organization, main thing, you want to know where the money's coming from and how it's being spent. Obviously there's cash, you want to know how much cash in the bank and cash flow things, but for the most part, donors, funders, federal regulations, they want to know where the money's coming from and how it's being spent, and if it's being spent properly. If you have a 40% program, percentage of your expenses, 40% program, 60% management in general, probably something wrong. Probably, somebody's getting paid too much, or you're not spending, the funds in accordance with your mission. Number 3, be ambassador. Cultivate relationships that benefit the board. Board members should be building relationships with different types of donors, community leaders, should be promoting the organization, be out there telling people what you do and why you do it and how you're helping people. Again, back to what I said previously, it's a mission-based, concept. You have a mission, and and your responsibility is to increase that mission, make it better, grow as an organization, and help whatever cause, whatever charity, the mission is associated with. You should participate in fundraising, whether it'll be a walk to raise money. A lot of organizations do meat raffles now, items like that. You want to participate in that. That's a responsibility of a board member. Number 4, support and supervise the CEO or executive director. Main something to do as far as that is you're required to recruit and hire a executive director, supervise and evaluate the performance, have an emergency and long-term succession plan, discuss with the CEO or the executive director of how he or she wants to be supported. And lastly, number 5, ensure healthy governance. And ultimately, that's what this presentation is about. How are we going to increase the governance? How are we going to make the organization better? Review and understand the bylaws, recruit and train new members, create structures that align with getting the work done, form the committees, conduct self-evaluation of board members and the executive director. So these are all responsibilities of the board. You know, like I said, you could go on and on each one of these slides and talk for a really long time on it because they're all very important, and you could really, you know, take a deep dive into each one of these. Fiduciary duties. I'm not going to spend a lot of time on this slide. I'm sure many of you have seen these duties and understand what they are. You have your duty of care. Are you actively participating in board meetings? Are you gathering information to make informed decisions? You want to avoid the rubber stamp approach. You do not want to show up to the board meetings, just vote what everybody else you want. You need to do more as a board member. You have your duty of loyalty. Members will put their best interests of the organization before their own. For example, maybe on the board, somebody's brother or family member is a contractor and the organization is in the process of doing a remodel or building you know, a new wing of their organization. Are you going through the bidding process? You have to make sure as a board member that you are taking into consideration all of these items. You can't just go with a friend of the family or maybe the board member owns the construction company. These are all things that you are responsible for. You have to do your due diligence. Again, maybe that could be the right choice, but again, conflict of interest policy, we'll talk about it a little bit later as well, will you know, play a part in that. Duty of obediency, that's to obey the law. Make sure payroll taxes are remitted timely. Make sure the federal and state tax filings are completed accurately and on time. Protect the not-for-profit's tax exempt status. So these are all items that fall within that, you know, that bucket of duty of obedience. You have duty of confidentiality. You can't disclose confidential information about the organization or any individual within the organization. Duty of prudence, being aware of risks and exercising caution in that decision making, and duty to disclose. Board members to be forthright in their speech and behavior. If they have information that would influence any decision or impact decisions of the board members, they have the duty to make that information known. So again, those are the fiduciary duties in a nutshell. Sometimes you see three of them when you look at maybe an article or if, maybe in a textbook, but I think, you know, these six lay it all out and cover everything without any issues. Just gonna take a sip of water for a second, catch my breath. Next topic we're gonna talk about is onboarding of new board members. Effectively, onboarding is critical for all boards, whether you're bringing new board members onto a board or starting a board from scratch. Onboarding new board members are very valuable to prepare them for the job ahead. There's five steps that could help with onboarding board members. Number one, developing a framework. When new board members start, it could be tempting to jump in feet first, get them set up on committees, have them start making decisions right away without even giving them time to get acclimated. Instead, boards should have an onboarding framework. This will ensure that every single board member hears the same messages, learns the same process, and experiences the same lessons as other members. This will help alleviate any confusion or uncertainty down the line. The framework should be created within a collaborative, thoughtful process, and you know, obviously take a lot of different perspectives in that developing. Number two, determine who owns onboarding. In most boards, each single person has a unique role and responsibility similar to a regular organization. HR is typically, or an onboarding team, bringing on new employees, teaching them the ropes, explaining internal policies and procedures to them. This will give new board members an important resource to go to with any questions, concerns, or inquiries instead of having to hunt down several different people from several different teams. So again, form an onboarding team. It could just be one person. It could be multiple board members. Maybe get somebody, a staff involved to assist with this. Number 3, collect and organize onboarding components. I'll talk more about that on the next slide. Sometimes a checklist for new board members is important. Make sure they're getting everything that they need, to get acclimated, to do their job right, and contribute in the best way they possibly can. Engage board members. Have some social gatherings, meet and greets. Have them attend certain committee meetings to get an understanding of the organization, what they do, how they do it, things like that. And obviously, most importantly, board meeting introductions. You should learn about who's on your board, learn what they do outside, learn what their profession is, find out what their interests are, what do they bring to the board, how can they help you get acclimated onto the board and contribute the best way you possibly can. And number 5, optimize the process. You want to make sure the 4 steps above, are acting efficiently, effectively, and ultimately being followed the best possibly can. So as far as board orientation and training, sometimes this could be an all-day affair with an organization. Sometimes it's not as formal. Sometimes it could just be a one-on-one with another board member, kind of bringing them into, bringing them up to speed on what's going on. A board handbook is very important. Lays out all the different documents. I've seen recently that boards have a portal that has archived information on the portal. It might be the bylaws, the articles, past board meetings, minutes, key governing documents. Those should all be included in the handbook. And obviously nowadays electronically is always the best way to do things. Sign into it, be able to bring you up to speed, and they'll also let you prepare for board meetings more efficiently. You should know the mission statement and the history of the organization. What are you doing? Why is the organization doing this? How do they do it? Strategic plans that should be included. Any documents that have already been completed or approved by the board. You should understand what's in process, what's coming down the pipeline. Board committees, rosters, and affiliations, contact information for board members, cell phone numbers, email addresses, biographies. Again, knowing who you're working with, who's on the board is very important. One way or another, you could see how they could contribute. You might have a CPA, you might have an attorney, you might have a volunteer on the board. So you want to know what everybody's doing and where they come from and how they can help. These are all characteristics of a high functioning and a high efficient board. Description of the board structure, different committees, job descriptions of staffs, CFO, what does the accounting department look like? Is there a program manager? Is there a compliance manager? You should know these type of things being on a board. Internal information, employee handbooks, bylaws, touched on that a little bit, and obviously meeting dates. When are we meeting? Are we meeting quarterly? Are we meeting monthly? Is there committee meetings? How often do they meet? These are all items that should be transparent and obviously, keep the board organized, which is, definitely half the battle nowadays, just staying organized. And also the CEO and the executive, or CEO or the executive director should play a big part in orientation and training of board members. Again, they know what's going on every day. Some board members, they come in, they don't know every day, what goes on every day. They might meet once a month or quarterly. So again, the CFO, they have their, finger on the pulse of the organization. So also some organizations implement a mentoring program, similar to a buddy program. So again, these are all items, that are important with board orientation, onboarding, and training. Moving on, policies and procedures, goals and key areas. Again, back to board responsibility. The board is charged with achieving certain goals, protecting the resources of the organization, facilitate the maintenance of accurate records of of financial activities. Provide for consistency. Make sure financial statements are done with GAAP basis of accounting. Make sure you're up to industry standards from year to year. Consistency plays a big part in a lot of different aspects of any organization, especially on a board. Provide a resource for training. Good documented processes. Again, a lot of turnover in certain organizations, but you want to make sure that those resources stick. So when the next employer, the next board member comes in, they could have a good foundation to get started with. And again, assist with compliance with government legal and reporting requirements. You want to make sure the board members know what's going on as far as that goes. Right side of this slide, a lot of key areas. So conflict of interest policy, related party transaction, whistleblower, code of ethics, document retention. You could go ahead and read these by yourself, but some of these policies that should be implemented obviously depend on the size of the organization, but a lot of them are key. I do want to hone in on a couple more towards the top of that list. And again, we're going to talk about the conflict of interest policy. Everybody knows that conflict of interest policy is a transaction that the organization completes with an insider. It could be a board member, a member of management, a family member of the board. And there's always this misconception that, these type of transactions are, they're not good. They're not all bad. They're only bad when an organization is taken advantage of by the transaction. So it's very, very important to track these transactions the best ways possible. So organizations should adopt and follow a suitable policy for conflict of interest. The policy should define what constitutes a conflict. Either you could use the IRS definition or a state definition. And you want to refer conflict matters to board or authorized committees. Each board should have, on an annual basis, each board member review and sign a conflict of interest policy. There should be a calendar item for a particular board meeting each year. It'll be a form, yes, I do have a conflict, this is the conflict, or no, I do not have any conflict. Sign it, put it in each of the board's files, and move on. And if there's a conflict during the year, you update that form as necessary. This is very important. But when a nonprofit is taken advantage of, the IRS can get involved. Years ago, and I'm not sure some people on the call might remember, this is a little before my time, but I do know about it. Prior to 1996, the IRS only had two options when dealing with a transaction like this that they didn't like or did not find fair. The first is do nothing, and obviously they didn't like that. Second is take away the organization's tax exempt status, and now that's extremely harsh. Could be a transaction that's very small. There could be a good explanation for it. So what the IRS did in Congress, they passed legislation in 1996 to create something called intermediate sanctions. What that means is if they find this transaction to be, unethical, not a proper transaction, they could fine the organization 25% of that transaction. And they didn't stop there. They moved on. They could actually fine board members who approved the transaction 10% of the transaction amount. So there are a lot of different things that they could do with these intermediate sanctions. One important thing to remember within the sanction, there is a safe harbor clause or legislation is with the IRS included. And so if you are doing these transactions, there's three rules you have to follow. The person who's involved in the transaction has to recuse themselves from the meeting. They can't be involved in voting on it. The organization has to use comparable data, to make sure the transaction's fair to the company. And obviously, you have to document these in the board minutes. So again, not all conflict of interest are bad, but they have to be documented, and no way, shape, or form can take advantage of the organization. Another policy related party transaction. This goes hand in hand with conflict of interest. Very difficult to monitor. That's why you have to do these forms, these annual forms to document, at least identify what you could identify during the course of business. Is there a bidding process going on? A lot of nonprofit organizations have federal funding agreements that have procurement policies, require 3 bids for certain projects or expenses. You have to make sure that you're abiding to those rules. And most importantly, is it the best option for the organization? Executive director might have a company car. You know, he might get a really good deal on a sports car. You think he's got to drive his children and his wife around. Maybe that 2-seater isn't the best idea. Maybe that's not the best idea for the organization. So you want to make sure that what the transaction is the best option for the organization. It could be a good deal, but is it really the best option for the organization? And most importantly, the board has to know about it. Certain items, for example, company cars, any type of related party transactions, the board should know about it. They should be disclosed and documented in the minutes. So again, those two go hand in hand. The whistleblower policy, another important policy. Yeah. No, I know. I know. Caroline's telling me that I'm talking too much. So my wife tells me the same thing. So, but there's so many good things in here. I don't want to miss anything. So I'll try to move it along. Whistleblower policy. This is very important. That's why I want to talk about it. You know, hard to believe, you know, almost 20 years ago, the Sarbanes-Oxley Act came out, talking, you know, with the Enron and WorldCom scandals. And, you know, those didn't apply to nonprofits. That act did not apply, but a lot of nonprofits did adopt whistleblower policies, you know, and that was the reason for it. And I'm not sure if everybody knows, but does anybody know what the #1 way fraud is detected, you know, in any organization? It's through a whistleblower. So obviously within, you know, these agreements, there's retaliation. You know, I'm sure that if somebody does blow the whistle, there will be no retaliation against them. A lot of nonprofits do require it by state law, depending on what state you're in. And you can structure this in various ways. Identify a compliance manager or a board member or HR to receive these types of responses. You don't want you don't want the CFO getting the complaint about a whistleblower if it has something to do with financial fraud or something of that nature, because he might be doing it. You don't want it to go to the receptionist on a dedicated email. Typically, in a lot of organizations, the receptionist, sometimes that's the rumor mill of the organization. So you want to have maybe a specialized email box, a hotline. A lot of there are services where you could hire a company to set up a hotline that will keep it confidential. And again, you want to always protect the individual who does blow the whistle from retaliation. So, and in New York State, well, federal government, the 990 asks all nonprofit organizations if they have a whistleblower policy, and it's a yes or no answer. So you're going to want to check that yes on that box, on that informational return. Travel and expense reimbursements. What could go wrong here? Everything could go wrong. This could be a big Pandora box of issues. You know, and some of the common issues are lack of receipts. There's credit card lack of receipts. There should always be itemized receipts. You get a restaurant, you have a $100 bill, you only get the credit card slip. There could be alcohol involved on that, which obviously, sometimes not allowed, especially if you're using federal funds. These type of items, are not allowed. Inappropriate expenses, hotel suites, first class flights, bottles of champagne when you go out to dinner. Again, these are all items that are inappropriate, especially for a nonprofit, especially when you're using federal funding, to pay for these type of stuff. So again, inappropriate expenses, approval of expenses, the CEO or the executive director. Maybe the CFO doesn't want to approve it. see the executive director as his boss. Maybe he doesn't want to say, hey, what's this expense here? This doesn't look like anything, maybe he's nervous to tell him, ultimately his boss. Easy solution for that, board should approve all executive directors and CEOs, travel expenses, credit card statements, things of that nature. And, another big one is going on a work trip and then, extending that into a personal vacation, which there's nothing wrong with, but you want to make sure that you have those expenses in line, make sure the organization is not, covering your family vacation. Make sure everything is, delegated. The hotel rooms for work nights are paid by the company. You're personally paying those other ones. So again, get to travel and expenses, very sensitive subject, something the board really needs to focus on and make sure that there's no items. And again, when you get to this type of stuff, these are items that could go out in the public, and again, you don't want the organization being in the news for anything. And lastly, piggyback off the travel and expenses, corporate credit cards. Easy to bypass this approval process. Personal charges are not allowed. Sometimes you get, oops, I pulled out the wrong card. I used the corporate card, to fill up my car instead of that. I'm sorry about that. That type of stuff happens. Timely reconciliation of statements. Board members or somebody designated on the board should review statements, and not only statements, also receipts with those statements. Biggest abuse of credit cards are typically gas cards, gift cards, and nowadays with all these third-party pay sources, whether it's Venmo or PayPal, there's a lot of room for items, for fraud or funny business, in regards to those. So again, there's a lot on this. We could go on and on about a lot of this, but I'm going to move forward, talk about board committees. So board committees, some boards may not need a committee. Some boards may need multiple committees. Larger the organization, the more complex the organization, there's obviously more needs for committees. Most boards cannot do all the work and do it well during the normal meetings. So it's important to have well-functioning committees to assist with the board. Committees are created to provide consulting and advice for boards or to handle certain tasks. Audit finance committee should probably have a financial expert. Investment committee should have somebody who's vast knowledge of investments to help the organization. Whistleblower, that would be tasked to possibly an attorney, to help with. And obviously, when you to go back and talk about new board members, nominating board members, these items are a nominating committee. So again, you could have many committees, you could have a couple. It all depends on, back to there's no board one size fits all when it comes to board governance, and that's applicable to board committees too. So types of typical board committees, most common, you have your executive committee, you have your audit and finance committee. Now those two type of committees can make decisions based on the board. They don't always need full approval by the board. Also, you could have your, like I mentioned, investment committee, compensation committee. You might have a capital campaign going on, big project. You might want to have a board, a temporary board to help with the fundraising, just specifically in that, for that aspect. Executive director search, might want to have a committee for that. So again, those are types of temporary or ad hoc type committees. Going on, maximizing value during board meetings. Again, you want your board meeting to be engaged. You want to send out the agenda beforehand. Again, I mentioned before, a board portal is a great tool to make sure the board members have all the information. You can't say, hey, you never sent it, I didn't get it, went in my spam box. You can log onto the portal, get all that information, review it ahead of time. You want to stick to the agenda. Give each agenda item a set time frame. More importantly, with board members, you want to focus more on strategy. You do not want to focus on, administrative type items or limited time. Your board might meet for an hour once a month. That's not a long time to meet. So again, using different committees could help with that, but get to the point. You know, focused on strategy, not admin. Create the rules of engagement. Maybe have a policy. No cell phones during the meeting, or nowadays you have Zoom meetings or virtual meetings or hybrid meetings. How many times have you been in a meeting and you don't see somebody's face and they're talking? Well, that's probably how it is with me right now, but we have the slides. But you want people are in their car. Are these board members being serious about it? Are they contributing? Are they just coming on the board to sit? Are they attending the meeting? So again, you have to set the rules. Complete post-meeting tasks. Make sure you follow up on items from prior meetings. And last one, that's a no-brainer. Keep good minutes. Document any major decisions. Again, make sure whoever's keeping records of your board meeting is doing a good job and covering everything that they need to make sure that they know what they have to document. Make sure that they're aware and educated on what has to be documented, for efficiency purposes. Okay. So we've got about 12 minutes left. I'll try to go through these slides as fast as possible. Rebuilding your board. Sometimes you have a board that's you're not happy with. You have to assess what you have. And I think these 4 questions here are very important to assessing what you have. Do you have the right size board? Do you have 5 people on your board? Do you have 25 people on your board? Do you have one major program? Do you have 50 programs? It all has to go based, every board is different, every organization is different. Does your board make up represent a range of diversity and inclusiveness? Again, you might want a finance person on the board, a program person, an attorney. I'll give an example. Client that I had before, it was a school for kids with special needs, and they had a parent who was on the board. And when we would do the board meetings or meet with the board, she was vital. She knew, what was going on because her child went to the school. So that type of diversity is very important for boards. How does each board member align with the mission statement? Why are you on the board? Are you invested in this organization? Are you invested in helping the board? Are you invested in helping the community? Are you passionate about that? These are all questions you have to ask. And how does each board member contribute? Some organization has board members, to sign a contract outlining what they're going to do. You should evaluate your board members, make sure the contribution is in line, what your expectations are. And again, rebuilding your board. Once you go through, assess what you need, it's time to find a quality candidate. Identify potential board members that bring at least one of the 3 W's. I'm not sure if you're common with this, acronym, wealth, work, and wisdom. Wealth, generous board members, sometimes they bring their checkbooks to the table, and typically board members like that, they have other friends that, are generous and, make a lot of good connections that way. Work. Is that board member going to invest their time and effort into the organization? Are they going to attend the meetings? Are they going to organize fundraising events? Are they going to be focused, on the mission of the organization? And the 3rd W is wisdom. Experience. Have they been on other boards? Do they have experience with this organization and these type of programs? Do they have good ideas? Are they innovative? Can they help take the organization to a next level? So again, these 3 W's play a big part. You could also ask current board members for help. You can meet meet donors with a board-aware mindset. Put the pressure on them, educate them on what you're doing, what the organization's doing. Tell them that you need help to get these programs off and running or to improve programs and how much progress the organization is making, in certain aspects. So these are all mindsets and things you have to think about when you're meeting with certain people. When you're making public appearances, mention that you're looking for people interested in becoming active volunteers on the board. Advertise in newspapers, newsletters, alumni newsletters. Consider if any volunteers are qualified to serve as board members. Again, you might have somebody right in front of you that could be an excellent asset to the organization, but you're just not thinking about it. So, once you evaluate all these, assess what you need, try to find these candidates, then you pick the best one you can. So, and hopefully that it works out and they contribute to the board, the way that you want them to. Crisis management. When you say crisis management, you think the worst. But there's a lot of different crises that happen every day. There always seems to be something going on. So you take a look at this, this chart here. You start with cybersecurity. Organization has a lot of donor information. It has their names, their addresses, their social security numbers. You have social security numbers of participants. Some might be children. You might have vendor information. These are all things that you need to guard, electronically. Employee information, banking information. These are all types of crises that could turn into crises. So identifying these type of crises is very important. Natural disasters. I know I see a couple people on the call are in Florida. I know Florida is known to have a lot of hurricanes. Again, do you have the right controls in place to mitigate any type of damage? If you're doing it, if you have a program, are you going to close? Are you going to move? There's all types of things. In Buffalo, we have snowstorms. So last year we had a historic snowstorm where a lot of things were shut down. Do you have plans in place for this? And I always throw, COVID-19 and the pandemic. I know it's not considered a natural disaster, but we, gained a lot of experience on how to handle some of these items, a few years back. Financial crises. Is there a recession going on? Is the market down? You might have a donor that is giving the organization $50,000 the last 5 years each year. He might give $20,000 this year. You can say, hey, man, what's going on? You maybe ask him, and he says, the market's down. I'm not in, same position I was before. I can't give $50,000. I could only give 20, or I could only give 10, or I can't give anything. So these are all things that you have to anticipate and have to know how to handle and, pivot what you're doing and how you're doing it, to make sure your organization stays afloat. And at the bottom, employee wrongdoings and reputation issues. What's the most valuable asset of an organization? It's not their $10 million investment account. It's not their property. It's not the money they have in the bank. It's their reputation. That will always be the most important asset of an organization. Sometimes damage to reputations can never be repaired. You go back to the United Way scandal years ago, people are still talking about that, even though it was 25 years ago. Employee wrongdoings, CEO maybe has harassment charges. Maybe he, received a DWI. Things like this are so, important to, to mitigate, to figure out, what are we going to do when this happens, and have a plan. So moving on to next slide, and we're almost there. We might not be able to get too much into the fundraising, but a lot of it, there's a lot of it's self-explanatory, but I do want to, spend some time on this slide. So for crisis management, best practices, anticipate, organize, and prepare for them. Identify the most likely and impactful crisis scenarios. If you go back to the previous slide, you can see a number of different examples of what a crisis is, what could go wrong. You should create a crisis management team. Who's going to do what? Do you have to address the media? Who's going to talk in front of the media? Who's going to talk to the funders and donors? Who's going to handle the social media accounts? These are all things that are very important, and obviously in any type of PR crisis, moving quickly is very important. You want to protect your organization financially. Identify the immediate impact of cash inflow and outflow. What revenue streams are going to be hindered? Are you going to take on more expenses due to whatever's going on? Is there going to be less expenses? These are all items that have to be addressed and addressed quickly. Analyzing budget variances. During a crisis, monthly, even bi-monthly variance analysis should be completed. And obviously during these type of situations, variances are expected, but staff should be able to explain why. And consistency of financial statements. You want to make sure, I mentioned before that your financial statements, even your interim statements, are in conformity with GAAP. That will allow you to make the best decision and avoid making any poor decision making. Support your people. Ensure your people have the tools necessary to continue their work. You got to stick together during times like that. Facilitate open communication. I mentioned a couple slides above. Communicate quickly and effectively. If you don't do this, you'll create a vacuum, and someone else will fill it with their own narrative. So you want to get out in front of any type of crisis or issue before somebody else does, and like I said, they'll put their own twist on it, which could be totally false. So again, you want to communicate quickly, effectively. When items like this or crises or major events happen. Reassess your risk profile. Learn from the past. Prime example, COVID-19. What'd you do right? What'd you do wrong? What can you change? If something like that were to happen again. And lastly, be adaptive. So about 2 minutes left.
All right, yeah, 2 minutes for fundraising. Also, too, if anybody has any questions, you can pop those into the question box. I'll keep an eye on those and hopefully get them answered before we're finished up.
Yeah. So fundraising responsibilities. Board members are responsible for fundraising, whether they're going to make a gift, annual gift by themselves, or they're going to help fundraise for the organization. They could organize, different fundraising events, like I mentioned before, a walk or a raffle or a gala or whatever the case may be. So you want to get donors involved there, and you want to motivate your board members to fundraise. You want to set expectations. You want to train them. You want to put them in the right situations where they can be successful in fundraising. And ultimately, you want to make it fun. You want to have fun. Fun is in fundraiser, correct? So you want to make it fun and do fun things for the organization, for the people you're helping. Get everybody involved when it comes to fundraising. It's very important. So again, and I know I had to go a little fast on a couple slides, but again, it's as mentioned, if anybody has any questions, my email is included on the slides. Feel free to reach out to me anytime. Happy to help. I'm really passionate about this topic and nonprofit organizations. So I want to thank everybody for their time who attended, and I'll pass it back.
Great, thank you. Yeah, it was a lot of good information. Like I said, pop any questions in there. I will also send everybody an email this afternoon with the recorded version and copy of the presentation again. So if you want to go back to something and re-listen to it or share it with somebody else, you can do that. I did have a question pop in on here. You talked about dollar amounts and kind of keeping an eye on those credit card receipts and all that good stuff. Do you see any kind of standards out there of a dollar amount that should be approved by the board before an investment is made? Is it $100, $2,000? Is there something that's a standard out there that a board should be approving, kind of those bigger purchases?
Yeah, and again, that goes back to there's no one size fit all, method for that. If, you might have a organization that has $1 million of revenue where, $500 could be significant. So again, you want to align, those type of policies with the organization and how it fits best. As far as travel expenses, I would suggest all travel expenses be reviewed. Executive director travel expenses be reviewed by a member of the board of directors. Credit card statements should also, I take that back, all credit card statements should be reviewed by either the CFO, and credit card statements related to the executive director or higher ranking officers within the organization should also be reviewed, along with itemized receipts. And again, this will help avoid any type of issues, and credit card statements can be tricky. So you're going to want to, take a look at certain itemized receipts with that. So again, it all depends on your organization. Is your executive director, been there for 25 years, what's your relationship with them? And also, whatever the particular circumstance is. So, but, I'm an auditor, so I like documentation. I would like to see controls in place. So I would suggest, as much approval process as possible.
Great. One more question that came in. Again, kind of, do you find a standard out there or a rule of thumb? Size of the board, is it based on the size of the organization, like staff size, revenue size? Do you see any standards kind of out there?
During our audits, when I'm conducting the audit or being on a board or committee, there's no one size fits all. If your organization is growing exponentially, they might be growing 25, 30%. I would anticipate having a larger board with a lot of different diverse people on it. Again, I would avoid any type of board that's too small, because it's easy to influence people and start voting, but also too big could be an issue too. So, typically like to see a board anywhere between, I would say 12 and 15 people for a large organization, and below that, probably, around 9.
Great, awesome. Well, thank you, everybody. We will, again, send out a copy of the recorded version and the handouts again this afternoon. You will be getting a post-webinar survey. If you could complete that for us just real quick, just a couple questions on there, and let us know if you would like to talk or meet with Anthony one-on-one. Have a great afternoon, and thank you for joining us.